Hello, everyone. Yes, I was AWOL yesterday, absent without leave. My internet was down. Yeah, I was up, Ronnie. You got to be tough. Okay, I've been up before the roosters for decades now. All right, let's talk about the markets here. So Monday, before I went AWOL, I was talking about the Dixie. And I said I was going to be shorting this market up towards the 101 level, almost got there. I actually booked it yesterday. So as you can see, I think it's very important that we do not close back or start trading above par and a half, because that could take out the 101 level, and that would be pretty bullish for the dollar. Okay, so we need a rollover here. In fact, I think it's important that we have a weaker dollar for a continuation move in the S&Ps, which continues. In fact, this area that we pulled back to was at 38%. I think the S&Ps have to hold this, or if they take it out, not by much for a continuation. We didn't quite complete a 50% retracement. So, a lot of people are saying there's going to be no retest on the low, and that's great. Even more people will be saying it if we get here. And if we get here, I still think there's a possibility of that. So a lot of people are saying the retest is over, and we don't have to get one anyway, but not many people. And we were in phase. We talked about this down at the bottom. I remember, I put up this green line, and once we were taking out 2400, that was the signal. Although there was divergence pointed out down here. So actually, when I was talking about what a wedge could do, 100% retrace is all the way up at 78.6. Even to me, it seemed impossible. And it still seems very aggressive
Dale,
narrative. Yeah.
good morning. Your screen seems to be stuck.
My
We're
page?
still seeing your screen
Yeah.
settings. I'm still seeing Euro USD, and users are reporting the same thing.
Oh yeah, because I'm looking at the how about now? S&Ps?
That's good. It's changed.
Yes.
Oh, okay. Thank you very much. So anyway, this was the picture down there, and just remember what I said. So I probably couldn't repeat it. Okay, so we could still be in a continuation mode, and down here, even halfway back seemed aggressive. Here we are, and a lot of people are saying we're not going to have a retest of the low. That probably continues to build, especially look at where we stalled from on the 4 hours, the 200 moving average here. So as I was saying before, of the euro, I think a weak dollar is important for a continuation move here. So like I said, a lot of things are either or. I favor a lower dollar, euro back over 109. I think that we could get something going here. Back over 109, 110's in the ballpark, and perhaps we're even going to see this to keep the market rally going for a few weeks. And let's see, I was wrong in gold. And to me, it looks like a bull flag. So I forgot what Steve's target was that we never quite achieved up here. We're probably headed towards
1733.
Okay, I think that's viable when you look at this, and if this turns out to be a flag, that's going to happen. So I knew I was wrong when we took out 1620, and I really knew I was wrong when they took this out. So no longer bearish gold until Steve's number. And I wanted to wrap it with this, and something Steve and I were talking about last week, and it's the most contrarian trade on the board in my view. A lot of people are saying with the, even questions we get in here from attendees are, how do you buy bonds? Because that's what the Fed is buying. So how can you bet against 10-year yields? A lot of people saying we're going to zero. I think they're going to have to wait for at least 140 before we turn it back to zero. So I have a lot of conviction here. We just got held back yesterday, but I think this is also part of it. And if we get this rally in yields, which the longer maturities even look stronger than the 10-year. See, we're getting this kind of move. I think the 3rd year could rally back to this 2% level. And that's a pretty big move from here, and not many people looking for it. And maybe we get a surprise and yields even continue from there. So, there are certain ways to take advantage of that just by being short bond futures, or you could own puts on something like TLT. There's TLT. My computer's moving a little slow today. Okay, that's not TLT. That's Bitcoin still grinding up there, still trying. So let me just show TLT. I'm going to turn it over to Blake. Yeah. Here it is. Okay. Anyway, also pull up your S&P chart and pull up your silver chart. They're identical. Binary, what's going on here. And I wanted to say just one thing, talking about our company. And you guys know that we're celebrating 3 years here. And you only really know about people and what they're like and trust building over time, like everything, like learning how to be a good trader. You can't learn it overnight. It takes time. And, besides being, excellent traders and being talented guys, there are a lot of talented people out there that, it's a powerful thing to be able to just click your mouse and make money being a trader, and it puffs up a lot of people to where they really don't care if people come and people go. They go, oh, well, you're just another number in the revolving door of this industry. But you know what I've noticed over 3 years is how much the team cares about everyone who becomes part of the community. And something else has died out. You used to see it in every store. Tell me if you guys used to see this sign in a store. The customer is always right. You don't see that anymore, do you? Now you have to prove you're right. Have you noticed that? The change in that type of customer, owner of a company or a restaurant or a store, and how they look at customers. And you know what? Our customers are always right, even when they're wrong. So it's something to consider, is also how you're treated, how it's customer service, because they're talented traders, but the ethics of the whole team and the company are really, I think, what sets us apart from, a lot of talented traders out there. So that you're valued. The customer is always right. Who's going to become a new customer today? And you guys know it if you've been in phase for any period of time, that we care enough about people to put on this type of webinar every day for free, of course, in the hopes that you'll join us. But if we didn't care, we wouldn't have to do this. So who's going to be a new customer today? Anyone want to give me a why? There's quite a few of you in here. I know you're probably a few out there that haven't become subscribers. Anyone? Okay. Blake?
Are you going to be a new customer, Blake?
Blake, will you sign up?
Yeah, I'll sign up.
All right, buddy. That's all right.
Hey
Okay.
Dale, I just want to say we're happy we found you yesterday. We were worried that you slept in and then you got abducted by aliens. We weren't really sure what was going on yesterday, but we're happy to have you back.
Thanks, man.
Yeah, we were on the
I know.
hunt for
The FBI knocked on my door, the NSA. I mean,
I
the
mean,
whole government
I was
looking
about
for
ready
me.
to start calling hospitals, police
Yeah.
departments, all sorts of things. We had the whole team.
I noticed how it progressed from jokes. So Dale's, was probably out all night singing karaoke to as the hours passed.
Well,
Andre's going to verified and everything. Yeah.
the problem is that we hadn't heard from you, and I didn't check my voicemail, and because no one ever calls my phone and leaves me a voicemail. Well,
Oh, really?
the robocalls do, and
Oh,
so
that's why you don't answer them, because
I don't answer them, and I didn't have your new number put into my phone, so
All right.
I must have saw, and then plus on top of that, my phone is silenced until
Oh, okay.
about an hour from now, so it doesn't even make noises or anything, so
Anyway, I'm sorry to put you guys through stress. There's enough to be concerned about nowadays, but good to be missed. How about that?
We're just happy you're okay.
All right, thanks, bro.
So, you were talking about the euro maybe getting up to 109. I want to show you. I mean, by the way, this is a very slow. It's been a very slow session. We've seen some dollar weakness come through. We've seen the Aussie rally, the cable's rallying. Amanda was saying earlier this morning in the in the newspaper she had read, and Boris Johnson's doing fine, responding well, and then this Bloomberg headline came out, and the cable was already moving into this, and then it spiked up right here when that Bloomberg headline came out, and then it came off again because apparently everybody else knew. But you knew just watching the pound going into this. I literally said in the chat room about 30 seconds before that headline came out, I said, the way the pound's acting, I would assume that Boris Johnson is doing better. And then the headline came out, and then we saw the spike up and then down. And I'm like, well, somebody at Bloomberg or people knew that Bloomberg headline was coming out, and so they've been buying the cable into that. And then now that it came out, it's like, it's over. That doesn't mean that the pound can't go higher, and that doesn't mean the dollar can't go higher. I just, the price action was pretty telling as we were sitting there. I'm like, oh, well, that makes a lot of sense. So let's talk a little bit about the euro, though, because the Euro group meeting is on hold until tomorrow. And, they're talking about the Corona bonds. And I'm going to tell you guys, if a Corona bond or, a Euro bond type of situation happens, a lot of people think, well, that's just, you're flooding the market with, more euros, but that's actually going to be very supportive for the euro, in my opinion. One of the reasons why the euro is trading a little heavier today is just because, the EU leaders can't get their act together right now. And so, they're like, oh, great, this meeting was yesterday, then it's postponed again until Thursday. But that to me tells me that there's probably they've got something big in the works. So I would be real careful being short the euro. Now, I think our levels in the euro are defined, and this is how I'm looking at the euro right now. While we're above 108, you got to be real careful being on the short side. And while we're above or below, 109.50, you got to be careful being long. We happen to be in the middle of this triangle right now, in the apex of the triangle, if you will. So when you hear the term apex being used quite a bit, with the in terms of like the apex or the peak.
Yeah, Cuomo is now a technical analyst.
Yeah, well, when in technical analysis terms, the apex of a triangle is when you're about ready, you're in the peak, if you will, between the two trend lines, and you're probably going to get a breakout soon. Now, if I look at the euro dollar, and I think, in terms of an upside breakout, I look at this. Okay.
Yeah. Yeah.
It'll be something like this or something like this. Okay. If we get an upside breakout, that means a break above 109.50, in my opinion, is going to be pretty bullish for the euro. Now, obviously, a lot has to happen in order for that to take place, but that would be a really nice Gartley pattern. And so I'll just reiterate, I'm really bullish if we get above 109.50. The flip side to that is if we get below 108, you got to imagine that we're probably heading lower. But you got to be on the lookout for this move. I think this move is going to be a big one. It's going to be a big, one that we can really capitalize on. So I'm just kind of waiting for this move to take place before I get too aggressive one way or the other. In my opinion, the Fed has done a lot to implement a lot of liquidity into the market and really take off some of the dollar funding pressures for the market. So therefore, I think the chances of the euro dollar breaking higher is probably pretty good, as long as stocks don't completely, crumble. Now, you talk about the stock market. Here's the S&P. The S&P, we rallied, and I'm a little nervous about the S&P because of the way that the market closed yesterday. And it's not just the S&P, it's the other markets too. We rallied past like some resistance and then closed lower. So I am concerned that the market is going to struggle up at these levels, but that doesn't mean it's has to. I mean, the market could actually still rally towards 2,800 or 2,900. I just think that yesterday's close was pretty, you got to watch it really carefully today. I think that's the gist of it. You just have to be really careful about, being too aggressive on the long side, knowing how it closed yesterday. And that's, same could be said for the NASDAQ that, failed at the 50% retracement in the 200-day moving average. The Dow, we rallied past, the 38% retracement, closed back at the 38% retracement. So, I think you've got to be a little careful with stocks. I know they're up this morning, but there's a lot of time, futures are up this morning. There's a lot of time left in the day, so don't get too carried away with what you're seeing from, a price action standpoint at this moment in time. Like I said, the cable looks pretty strong this morning. I think, Boris Johnson's on the road to recovery. Thank God. My office, we were talking about, what happens if if there's a head of state that actually succumbs to the coronavirus. And, my opinion about that, and it would obviously be horrible, and I'm not wishing that on any head of state, but sentiment wise, it would be really a tough pill to swallow for people and investors in general, because you lose a head of state. Like, let's just, use the example of Boris Johnson. Let's say, things take a turn for the worse. The problem is that people go, wow, even a world leader, a head of state with the best medical facilities available, he still couldn't escape the wrath of the virus. So from a sentiment standpoint, that it would be negative. So I'm pulling for him and everybody else that's dealing with the coronavirus, obviously. But I mean, that's one of those things that you have to be careful with, because it would really dampen sentiment. All right. So here's the Aussie. The Aussie is again really strong. We had a big. This by the way is a bull flag pattern. Just so you can see, we came out of this wedge, and now it's like a bullish pennant, and we can extend a lot higher if we break out. So you have to be a little careful with the Aussie, because right around the 62 cent level is going to be a, this is the 618 retracement, by the way. So you can see right here, the 618 retracement comes in at 62 and change, 62.20, which we haven't been up there, but it's a level that even if we break 62 cents, you have to know that it's right there. So a break above 62, 62.20, 62.30 would be really quite bullish for the Aussie, and just keep that in mind. Boris Schlossberg, which you've had on multiple occasions on the Face webinar as a guest, and I talk to Boris from time to time. We chat, and even talk on the phone, and he's a great guy. He was saying the best trade of 2020 is going to be long commodities, short the stock market. I saw him say that like yesterday or the day before or something, and I can't really disagree with his thinking. And when commodities and inflationary pressures start to mount, the commodity currencies might do well, but how you trade that regarding currencies, I'm not so sure, because if risk appetite continues to improve, or excuse me, I'm sorry, dampen, do I really want to be long the Aussie dollar? I don't know. Maybe being long some commodities like orange juice futures. I don't know, but anyway, I think the Aussie is still very sensitive to risk on, risk off, and I think because the stock market is stronger this morning, the Aussie is doing a little bit better. Kiwi also is doing a little bit better, but not as good as the Aussie. The Aussie, and by the way, the Aussie New Zealand, if you haven't seen it, it's right here. We are challenging some resistance. So you can see the outperformance of the Aussie is really shining through at this moment in time. Now, speaking of commodity currencies, look at the loonie. The loonie, this is one that's kind of done better than the Aussie. And I think one of the reasons, obviously, is because of crude oil. Crude oil is so ungodly weak. I mean, we were at 25.20 this morning. We dropped all the way back to $24. Crude oil looks like crap. And so as it trades heavy, the dollar Canadian or the Canadian currency is going to be a little bit weaker. So that's the opposing force right now, where you see the Aussie looking better, the Canadian not so much. And I think if crude oil continues to stay weak, then it's hard for me to think that the dollar Canadian or the Canadian dollar is going to be too strong. So therefore, maybe one of the trades that you might want to start thinking about is the Aussie Canadian, which I think this is one of those pairs that has been beaten down with the ugly stick big time. And if we get a rally above like this 88 cent level, I mean, that would be pretty, in my opinion, it'd be pretty bullish, the Aussie dollar, or the Aussie Canadian, excuse me. And remember, this thing has been just gotten the beat down. And you look at, decades worth of data, and we're near the lower end of the range. So, I mean, this is one of those that, if you don't have to play it in a huge way, but if, the commodity market is, maybe a little bit of improvement in risk appetite, but everybody thinks that demand destruction in crude oil is kind of here to stay. The Aussie Canadian might be the way to go. And I'm not long. It's just something that I'm keeping an eye on as of right now. And obviously there's more stuff that I could talk about, but those are the main key points I wanted to discuss, especially on a slow day. And I'm gonna pass it over to my colleague Steven Stelios. How are you guys doing this morning?
Good morning.
Good morning.
Kind of a slow session today.
Yeah, surprisingly, actually. But
yeah, it's very, very slow. Not a lot going on. I'm a little, not super excited about much of anything at this point. Just trying to
You
just
see,
trying to keep my hands off. Really, is what I'm trying to do. You know what I
you
mean?
see the wonder of human nature. The human brain is built to assess things comparatively. A month and a half ago, a session like today would look like a rather live session, right?
Right.
But after a month and a half of what we've had, it now looks so peaceful and quiet just because, we recently had a lot of volatility.
Yes, Dr. Steve. Yes, indeed.
How true is that? Anyway, well, guys, I hope things liven up, but we might actually have to wait till tomorrow. Obviously everybody's going to be watching the weekly unemployment claims. I do believe this Euro group meeting is going to be really important for the Euro. I think if they do introduce these Corona bonds, they're calling them, or Euro bonds, I think that's actually going to be a big swoon for the Euro. I think a lot of people are believing that you're flooding the market with euros. It's going to be bearish here, but I actually believe the take up would be big, and I think it's going to be a big boon to supporting the European economy through this crisis. And I think that's why the Euro group meetings have been dragged on so long, is because they are planning something pretty big and just trying to get their heads wrapped around it.
In all actuality, the problem with agreeing in a Eurogroup is the fact that you have a lot of countries, in essence, trying to persuade a few countries to guarantee their spending, and that's not an easy thing to agree on, right?
Yeah.
Because let's be honest, who's going to guarantee for those? I mean, the headline is going to be like everybody guarantees for those bonds, but in essence, who is everybody? Is it Greece? No. Is it Italy? No. Is it Portugal? No. Is it Spain? No. Is it France? Not even. So in essence, it's like persuading Germany, Netherlands, and a couple more to guarantee for everybody else's debt. It's not going to fly that easily.
Right. And there's probably a lot of screaming and yelling going on. But I do really like this setup. If we do, I don't know if you guys were here when I said it. If we do get an upside breakout in the Euro, this is a perfect setup for a Gartley. I mean, that's a this is a very this would be a book by the book Gartley pattern. You have the 618 retracement, 786, pull back here for D. This would take 161% extension, and then we'd have an 88 retracement of the whole move. You could have really a massive rally here, and then a massive reversal up here that I think you could play a couple different ways. So this is what I'm hoping for this to happen. And and I'm not long the Euro right now, Euro dollar. I'm just saying I hope this happens because I think it'll set up great opportunities for this month. But we'll see. I'm hopeful. I try to envision a lot of things, but that doesn't mean that they're going to happen. You know what I mean?
Yeah.
All right, guys. Well,
okay.
I'll pass it over to you, Dale. Welcome back. We've docked your pay 10 times, so just so you know that.
That's very generous. Like I said, the customer is always right.
All right, and welcome back, Dale. Steve,
right,
Stelios, you guys, I'll pass it over to you. Have a great one, everybody.
You do, mate. Have a nice session.
Yep.
Thank you.
You too.
So like mentioned, we have the Eurogroup meeting where the Europeans have to agree on this, I think it's 500 billion euro bailout or package, basically, stimulus package. It's going to be difficult.
If I've understood right, Stelion, correct me if I'm wrong, the 500 billion is not so much of an issue. It's that there are pressures to make it more. I think more or less they can agree on 500, but the vast majority of the countries want to push for more than that. Am I right on that?
I'm not 100% sure. That's what I read as well, but I have not. I can't say it with 100% certainty. I'll
By
have
the
to
way,
read up on it.
we just got data that isn't really going to move the market. I just mentioned it. Canadian building permits at minus 7.3% versus minus 4.5 expected, and a revision lower for the previous number to 3.3 from 4% positive.
Yeah, I don't think anybody cares at this point.
Yeah, nobody cares. Just mentioning it since it just came out.
Yes, sure. So let's see what the Europeans manage to agree on. If they do, I read on the internet, and I speak to friends here in Greece. I say, look, why can't they agree to save the situation? It's not as simple as that. It's not like okay, here's you can have €1 trillion or whatever it is, and you can fix things. It's much more complex than that. And given that it's not one country like the US, they put together a multi-trillion-dollar package. They're going to get at it. This is 27 countries, so it's a very different situation. But anyway, let's see what happens today on that. I think the main focal point at the moment will remain equities, because they pulled back from the highs yesterday, but they seem a little bit strong today. The whole point at the moment, in my opinion, is people are trying to see the light at the end of the tunnel when it comes to the virus and how this is going to evolve. We've seen leveling off in cases, or even dropping in some countries. Although today, we had for yesterday's numbers, actually we had some bad numbers, where Spain and the UK. Actually, the UK reported the highest number yet of fatalities yesterday, and Spain also, after a few days of decrease, has now increased again quite considerably as well. So this is not being. I don't even think remotely close to being over. When the whole situation gets contained in terms of the new cases and more deaths, obviously this will come in the next few weeks probably. But after that, what happens with the economy? That's what we've been saying here every single day. And it's, in my opinion, it's just not going to be a V-shaped recovery. You've seen companies canceling dividends, and forward guidance being very, very poor now. So I think
I think, Stelio, that's the tip of the iceberg still that we're seeing.
Unfortunately, I agree. I hope I'm wrong, but unfortunately, I agree. So I think this rally that we saw was a typical bear market rally. We're squeezing a little bit again today, but I'm praying that we see something like 2850 in the S&Ps. I think that's going to be an amazing level to short.
I think Janet Yellen endorsed not paying dividends yesterday. That was part of it. No buybacks, no dividends, and a lot of bankers aren't going along with it, because that would definitely create even more of a confidence crisis if the banks declared no dividends all of a sudden.
Listen, we've talked about that. We've talked about that before, Dale. I'm a capitalist, and I believe in free markets. Okay, so now we have the following weird situation. They don't want to let the markets function freely. By functioning freely means you can do whatever you want. You can distribute as many dividends as you want.
Yeah.
You can buy back as much stock as you want. But you failed, you go bankrupt. End of story.
Right.
So my first and only choice under normal circumstances would be that. Now, we have to start making concessions and say, okay, since they don't want to let them fail, so if we assume that they want to do their own thing, which is bail out everybody, what strings attached would you want to have under that scenario?
Well, buybacks are gone for sure. Every political figure has said that.
But you do understand the insanity of that, because we've seen it in every single business cycle during the past 3 ones. Companies buy more and more and more and more of their stock at higher and higher and higher prices, and then prices crash, and instead of having money to actually buy back their stock when they're indeed cheap, they've spent all the money they could have put aside buying back stock when it was expensive, and then they don't have money to buy it back or save themselves when prices are actually worth
A
it.
good value.
Yeah, but CEOs and board of directors get paid by stock price. Come on.
Yeah.
Exactly.
That's
Exactly.
it.
And that's a perverse incentive. And you know something? Somebody would say, but that is a failure of capitalism. And the answer is no. Because the first time that these guys would pay themselves a lot of money just to prop up their stock, and then they would fail and their companies would go bankrupt and
They'd
not
be
get
gone.
a bailout,
Yeah.
they'd be gone. And then during
There'd
the
be
next
a
business cycle,
deterrent. There's no
exactly.
deterrent. You're right.
Exactly. During the next business cycle, they wouldn't be doing it again because they knew that if you actually want to pay yourself a lot of money now, there's going to be soon enough the day of reckoning when there's not going to be a company left. But now they know that they can pay themselves whatever they want, they can distribute whatever they like, and when things go bad, they go knocking on the door of any government and saying, we're an important industry, we're an important bank, we're an important airline, please bail us out. And they'll do it. So that is what we've been talking again and again about. This is what moral hazard does to any type of system. Right, this is the problem. So if you sever the link of moral hazard, trust me, the market will manage to balance itself properly. But we want to keep some elements of capitalism while at the same time, in essence, referring to policies that are more socialistic when things go bad. But you know, you can't combine those two worlds and get a proper outcome, right? That's the problem.
Yep.
Yeah.
Yes, yes. Steve for president. I mean, that's what I always say. For finance minister, you would be a good finance minister, man. Anyway,
probably I would be the lousiest one because Stelio, there is a truism. Good economics is usually bad politics.
bad politics,
Yeah, and good politics is usually bad economics. And
Yes.
unfortunately, the problem is that to survive and become, you know, a member of the cabinet, you need to be a good politician. So, you know, those are mutually exclusive.
So you would be sent to the gas chamber, but the history books would remember you in a good light.
Yeah.
Okay, isn't it worth it, man, for your legacy?
Before we jump into the charts, because we have a lot of questions to cover, we haven't forgotten about it. We have the list here of people.
Yes.
Yeah. So let's see who the three people are going to be today. You know, I remind to anybody that doesn't know, we're celebrating 3 years. We have our 3-year anniversary this week of FACE, and you know, we're giving back something by offering 3 1-month premium subscriptions to ForexAnalytix to 3 participants. So we'll roll for it every day for the previous one. Here is the list, removing anybody that doesn't have a valid email address, you know, etc., and duplicates from yesterday. So
thank you, Richard.
We're going to go to random number generator. Let's see how many we had with us yesterday that we have an email for. 309 on Zoom, because you know we can't know about other platforms. I mean, we know how many they are, but we don't have data. So
Steve, click it once just to see. Click it once to see.
Yeah. I'll click it a few times so you see that. Yeah, it generates numbers. So Stelio.
And now let's go.
Let's go. 30. So let's see who the lucky one with 30 is. That is Forex. Oh,
Gal.
I can assume. I can assume who is that. Yeah, it's Forex Gal actually.
Yeah, fix.
Nice.
Fix.
Yeah, there you go. Yeah, it's fixed. Yeah. Google did it on purpose. No.
Okay,
100. Second one. 166. There we go. Frederick L. Let me find him on the full name list that I have on the other screen. 166. Yep, I have his name. I'm writing him down. Okay, perfect. And last but not least, we have 242. That would be Robert B. Let me go to the other list. Okay, noted him down. Robert B. Okay,
Excellent.
Stelio, so I'm going to send you everything.
Yeah, yep. And
Yeah,
I'll take
after
it
the
with me.
webinar, and you know what to do. By the way, all guys with us today, hi guys, just would like to share my experience and appreciation. I was one of the lucky people who was granted 1 month of free access from ForexAnalytix. Yesterday, I couldn't believe it. I heard my name, but I got an email from Stelios, so now I have the privilege to view all these analyses from our favorite gurus and chat group where you can ask questions. It's amazing. Blake, Steve, Stelios, they're all real. They do reply, etc., etc. A lot of good words. Thank you very much, Olga. You know, we'll have a few more, you know, getting you know, in with us. Okay, so great. Stelio, anything else that we had overnight before we jump on charts?
No, we had well, we had some data which really has become very irrelevant. We had the Norway inflation came in at 0.7% year on year, down from 0.9. I'm actually amazed it's so positive, but anyway,
Yeah.
No, nothing else.
Give it a little bit of time.
Yeah. We're obviously expecting now just weekly jobless claims. Is it tomorrow? Tomorrow, yeah, from the US.
Yes.
And
Let's see if we can actually beat last week's incredible number.
Yes. Well, hopefully we won't.
I hope not.
Okay,
Yeah.
guys, I'd also like to acknowledge it's Passover, and I'm extending this holiday to all creeds and religions. And what you have to do is take a little lamb's blood and put it over your doorpost. And you know what? the algos of death will pass over your account and not touch you. So you want the algos, not not the angel of death. The algos of death will pass over your account and you'll be fine. So happy Passover to those that celebrate it. You never heard of the algos of death?
Never.
Oh, okay. Anyway, they're out there. They're out there. Okay.
Richard says a new Eurovirus bond first step for a true EU federation. Though it will drain Germany and Holland's finances, let's hope it doesn't become a neoliberal Soviet Union over time. That's why I think it's going to be very hard for them to agree. Dillian says, and I agree with him, and I've indicated in some time that my fear is that Italy is a problem, the main problem. I mean, the moment he says here in Italy, there are more and more people supporting an exit from the EU as they don't see the benefit of staying in. Dillian, my first answer is that they're going to find out the benefit once they do exit. And the main benefit actually is that they will realize that in order
no one
for
will
them
underwrite their debt.
Exactly. And in order for them to do okay, they will actually need to put the house in order. And the adjustment, I'm telling you from first-hand experience as a Greek, is going to be brutal.
Yeah.
There's no other way word to use for it.
You went through.
Yeah, the experience of readjustment is going to be brutal. So the same people, I can guarantee you that, the same people that are hoping for an exit, they're going to be the first ones that are going to be yelling for what happens next. Listen, I am not judging and I'm not saying that exiting is going to be a bad thing in over the long run. I'm telling you that those that advocate for it have really no understanding and no idea the pain involved for a period of time. They really have no idea.
I interviewed Richard at Able Trading, and he's from the UK, and I asked him that question, and with the Corona, with the crisis now, and I said, are people, is it more difficult post-Brexit with this situation? He said, absolutely. People are learning, what that decision really costs right now. Leaving the Eurozone in the UK.
Yeah. Indeed.
Maybe that was just his opinion. Maybe there are no repercussions, but there are experiments out there.
There are always repercussions, but it's one thing looking at the long term, what's going to happen. Another thing, short to medium term. Steve, have you exited your S&P long? Answer: no, I haven't exited my S&P long. Yesterday's candlestick is a warning, right? I mean, at some point we were, very high on the day and we closed slightly negative. So far we do see here a shooting star, but is that enough? No. Why? Because we did hold these consolidations highs. You can see it here clearly. Okay. So if I did see or if I do see continuation today, let's say that we reverse lower once again, and we close, lower on the day, I will very seriously consider to take profits on the other half of my long position and perhaps even reverse. But so far, I judged yesterday to be a warning and not more or no less than that. So I'm still, closely monitoring, but I'm not going to be intimidated to close out my position because of one negative day. I still think that there is a decent chance we can move higher before we reverse lower and head quite a lot lower, in my opinion. Okay. I would have told you if I had, anyhow. Economies are too indebted to go back to business as usual without widespread debt forgiveness or new currency system. I totally agree with you, Richard, and I believe that both of those things are going to happen. If not now, in what follows from this cycle that's going to begin through this last stage, because I believe this is the last stage of fiscal irresponsibility, monetary madness, and whatever else that entails. I think that's going to be the end game, what you're describing. There will have to be debt forgiveness. There will have to be a more stable monetary system that's not going to be completely fiat. Now, is that going to be going back to the gold standard? Is that going to be establishing a new type of standard like a basket or whatever? I can't tell you in advance, but it will have to be something different. Will you discuss about crude oil? Absolutely. So crude is pulling back. Do I think it's headed to new highs? Not necessarily. I think that crude might find support anywhere between here and like 22 and produce another leg to the upside, at least another leg to the upside. Alternatively, if it goes below 22, we might see lower prices, which it's going to be godsend if you ask me, because I would want to buy crude, as low as possible. 19 was already a very nice level. Can we see 16, 17, 15? I hope so, because there's going to be one way from there, at least in the medium to long term, there's going to be one way from there. And as Stelios has said very correctly, probably the best way to play that so you don't have to pay for it is going through buying some of the big names, some of the big stocks, Total, Shell, BP, if we do see lower prices in crude. But so far, don't get trapped to believing that, okay, we failed from that support resistance area near 30, and that means that we're necessarily headed to new highs. I can easily envision another leg higher towards like 32 to 35 and perhaps failing from there. So, you need to be a little bit careful here. Natural gas, on the other hand, which we had a discussion about it yesterday, is obviously pulling back because crude is, but keep in mind that it has already broken through this double bottom here. It has broken through this descending channel. So in the same manner, as long as we remain above this channel, I wouldn't be surprised to see another leg higher towards 205. We have the 38.2 there, horizontal support resistance area as well. So don't write off crude and natural gas yet, thinking that they're necessarily on their way to new lows, because that's not necessarily the case. Okay, now euro pound, what we said yesterday applies. I mean, having to do with our dollar thesis since yesterday, nothing has really changed. I mean, euro hasn't really done anything. I mean, it had a spike lower, but we're unchanged on the day. Pound, more or less the same thing. The Aussie and the Kiwi are testing previous highs, so perhaps this was a corrective pullback here, and we need to see one more leg to the upside before we see lower prices. So that's a likely outcome, a likely scenario here. Having to do with the metals that people are asking for, gold, maintains its footing near the multi-year highs, and there's nothing really bearish here to talk about. Silver still recovering within this ascending channel, finding resistance here at the 50% fib horizontal support resistance area as well. Next upside target is the $16 area, another confluence of resistances. So I would assume that we can easily see that level getting hit as well. Platinum and palladium haven't done much. Keep in mind, as I've said about platinum, 775 is an important area of resistance. So, I wouldn't be jumping the gun being long, as long as we trade below and close to that resistance area. I mean, there is no risk reward for you to do so. Thank you, Richard, for your kind words, by the way. Oh, yeah, Frederick is here, so he says his lucky day. Yep, Stelios is going to email you, within a few hours, and we'll create an account for you. Frederick, congratulations, nice to have you. No, that's 3 names, actually. We did roll for 3 names, right? Yeah, we did. Let me see my list. 1, 2, 3, yeah. Robert, Forex Gal, and Frederick. Yeah. The banks are really desperate. I just got a message from my bank to help support you. The first £500 of your arranged overdraft is now interest-free from 9th April to 9th July. They normally charge 19.99 APR. Okay. Interesting. Gold and silver, platinum. Okay, we covered those. Yesterday, LQD got the death cross. Yeah, that's a good point, Dillian. 50 moving average crossed the 200 moving average. So most probably the bear market rally is near its end. I would agree. We're definitely close. I mean, it might take a few days. Worst case scenario, it might take like a week, 10 days or so. But it's very hard for me to see it getting prolonged more than that. We haven't left Europe yet, so Richard is probably Rimoner, says Andre. Will you discuss about crude? We did that. Silver, gold, copper. Yes, copper. Let's have a look at copper, Euro, Aussie, Euro CAD. We have questions about those. Coach, do we have an interview, by the way, today? Here is copper. I think, we can still safely say that this is, a corrective recovery. So far, this is perfectly channeled. As you can see here, we already had some nice RSI divergence pointing to that. There you go. Upside targets 230 and most importantly 248. 248 is going to be a key area of resistance for copper because it was a long-term support area, and once we broke through it, we actually accelerated lower. So definitely a key area for the market. I would expect that even if we make it to 2.48, the initial reaction is going to be a rejection. Now what happens from there, we're going to find out. But as a risk reward perspective, I think shorting 248 is going to be a very good trading proposition. Okay. No, that's not, but the email is. So with huge dollar, yen and lira, dollar, yen and lira. Okay, when you say dollar, you mean dollar versus the yen. What to do with coffee and sugar? Give me tickers because I don't trade commodities, but I can definitely have a look at those charts for you, mate. So if you can give me the tickers for TradingView, I would gladly have a look at coffee and sugar for you. So first, Euros and EuroCAD. So EuroCAD, there we go. I mentioned yesterday that EuroCAD, this is likely a diamond formation reversal, but I said be very careful because 150, 150 is the area where we, in essence, fill the gap. So, I would want to see what's going to happen from there. But for the time being, this looks like a nice reversal here. Now, having to do with Euro Aussie, we covered that yesterday and not much has changed. So far, this move lower can prove to be corrective. Watch for 174.20, 174.30 as an area of support, 171. After that, And, I wouldn't want to see it go below that, because then we will start overlapping with the long-term broken channels territory, and that will probably then mean that this is not corrective. But as long as we are holding above there, and especially since I expect risk to turn lower again, I think that Euro-Aussie might see at least one more move to the upside. Okay, so that's my thesis. And obviously my position on Euro Kiwi is a very, very similar one. You can see here something like a pennant, 178.50 to 179, an important support area. Sure, we can have a look at USD MXN. Do you expect USD yen to move lower? I've said it before, and I'm going to repeat it again. I think that USD yen is probably the favorite pair of your broker. Just look what it has done. It has been coiling in a multi-year formation, a triangle. It falsely broke higher, turned lower, falsely broke lower, turned higher, falsely broke higher, again, turned lower. Bottom line, I don't want to trade it, right? I mean, look for something else to trade, as simple as that. I think it's, even if you're like one of the best traders out there, unless you're a very short-term scalper, in which case totally different rules apply, because in what seems like a non-existent trend, you can still make money by taking advantage of very short-term trends, like trends you see on a 5-minute chart, on a 15-minute chart, etc. Really look elsewhere. I mean, that's my advice to you. Look elsewhere. Yeah, as Tiana is saying, that is the abomination trade. Really, it is. So, we're very lucky. I mean, if you're an FX trader, I consider myself mostly an FX trader, right? You're very lucky. We have so many pairs we can trade. There is absolutely no reason to trap yourself in trading a few of them that look that horrible like USD yen does. So really look elsewhere. USD MXN. So we mentioned that the first day we saw a reversal at the beginning of the week. We mentioned that this can really be a big, bull trap up there. And I wouldn't be surprised if we saw a bear trap following, I mean, a move below 2280. But on the other hand, there is also the scenario that, we're pulling back a little bit and we're going to head to new highs. So those are the two scenarios. Bottom line, there is clearly not a really good risk reward in being long. We've already seen a huge move to the upside, but until proven otherwise, the trend remains higher. So it's a very tough thing to trade at the moment. It was much easier trading it once we saw that reversal that day. You could have traded it, after it turned lower and had already started becoming like a shooting star. Now, where we currently are, risk reward would probably still favor short positions, but conviction would be rather low, because this might evolve to be a triangle. It might evolve to be an irregular correction, meaning a lower low than that one and then higher. It might prove to be just a pullback before seeing higher prices. I think that there is going to be good money to be made being short the USD MXN in the future. I'm not talking about the distant future, but I think we need to see more price action here to see what we're handling with at the moment. The Aussie Kiwi, Blake actually briefly mentioned the Aussie Kiwi. So far, I'm looking at this Aussie Kiwi's rebound as a corrective one. And to put things in context, first of all, we're currently backtesting this broken channel. You can see it here in purple, right? And also, so far, this rebound higher looks like a bearish pennant, right? So I think the risk reward definitely favors short positions here. Would I be trading it? Not really. If you really want to trade this, it's one of the very few times I'm going to say that you have to do it with quite a high leverage, because it's moving so slowly that if you actually want to be able to capture something within, a period of days, you probably should, employ more leverage than you usually do for a position. But I think there are better opportunities out there. Anyhow, risk reward definitely favors short positions from here. Okay, for all the reasons I mentioned here, and you can see on the chart. USD INR, yeah, sure. Coach, by the way, let me know if we have somebody here waiting to be interviewed.
Yes, our guest is here, so whenever.
Okay, perfect. So I'm going to wrap it up with this, and tomorrow we can have a look at at some commodities like what our friend asked, like coffee and sugar, etc. Keep in mind that my fundamental thesis about those is that they're going to move a lot higher in the foreseeable future, but we're going to have a look at their technical picture, in the shorter term tomorrow. Now, having to do with USD INR, what I see here is a triangle, a consolidation, as the market is having the opportunity to work out its overbought conditions. You can see here the RSI. So I think there is a very high probability scenario that the USD INR is going to produce another high before we can see lower prices, in which case I think that an attractive upside target would probably be that 161.8% extension at 78.5. So thank you, everybody. See you in the chat room. Tomorrow we're gonna roll for today's participants, as we did today and as we did yesterday. So thank you, Dale, and enjoy the interview.
Okay, thank you, Steve. Sheldon, I'm going to get you set up here. It's been such a long time since you and I have talked. Looking forward to it. There you are. Welcome to Face. Sheldon McIntyre, how are you?
I'm doing okay. You?
Good. It's been a long time, buddy. So in order to share your chart, I'm not sure if you've used Zoom before, there's a drop-down menu with the green box that says share.
Search screen. Yeah, they actually
Screen.
recently changed it to search screen.
Yeah.
Share,
And
let me
then-
see. Compartir, yes.
It's the only colored button here.
Yeah.
Yeah.
It's a color of money. Only lime green.
Did you get it?
So counterfeit.
Yes,
Here
it's
coming
coming
up
through.
now.
Yeah,
Yeah,
perfect.
okay.
Okay, thanks, Steve. So Sheldon, you in Canada or Peru? Where are you nowadays?
I'm actually in Chile. I live in Chile.
Oh, Chile, that's right, Chile. So what are things like there? Is there any coronavirus down there that's causing problems for the country down there?
Yeah, we're pretty much like most countries around the world. I think we're sitting at around 5,000 confirmed cases now and around 40 to 50 deaths. Where I live, we're in quarantine. It's enforced by the Chilean military, which is a little bit new for me, but we're pretty much like everybody else, working from home.
Okay. Yeah, I'm having a little trouble with my computer. We know that Dale has some is we are going to resolve it. Oh, okay, thanks. So what are we looking at here? The dollar against the rand. So your currency moves here. What do you see? An ascending triangle here, Sheldon?
What's that?
Dale.
Yeah.
Why
I'm having a little trouble hearing you, Dale.
Yeah. There is a problem with Dale's computer today. Actually, it's not his connection. He has a problem with his computer. Dale, I know it's weird, but why don't you type in the questions and I'm going to ask them until we fix your computer later today.
Why don't you ask them, Steve? Sheldon's a great technician. He has views on almost every market, and he brought charts. So it'd be a good day for you to just take over, get you ready for the
Now you
summit.
sound good, Dale. So
now I'm okay.
Yeah, now you're good.
Now you're okay. So, but if you start breaking again, I'm gonna let you know, Dale. Okay.
Okay. Yeah. Just
so
step
go ahead,
in,
and I'm gonna be here, and I'll step in if there is a problem again.
Thank you. So, Sheldon, what are you looking at here? Is there going to be more dollar strength, or are you looking for some type of topping formation here? Almost looks like we're not confirming up here at new highs by too much using your, what is that on the bottom? Is that an RSI?
It's a Bollinger Band.
Oh, okay. All right. So what's it telling you?
I actually, what I see here is we went into the end of last week where we had an extreme overbought situation. You'll see it sets up similar to 3 previous times where we actually marked tops, and then this time we moved sideways. Last week I put out on Twitter that I thought that there was going to be some type of consolidation, and it just happened to, there was a confluence also of the 1.618 extension of this particular decline. And that's what's happening this week is we're getting a pullback there. Do I see this going higher moving forward? I do. I think we're going to see some type of consolidation. I don't think it's going to be particularly deep. It will go below the 2016 high, but then I think we'll continue to march forward. I don't really like to be the consensus, but I'm bullish on the dollar on the intermediate term to long term.
Okay, I'd like to address that. Could South Africa, I know they have a lot of political issues going on there, but could this have anything to do with natural resources, or is it strictly dollar related?
I think it's both, but I think in this very short-term period, I think it was really dollar related. I think that whenever you have such cross-asset volatility, I think, and being somebody who lives abroad, I mean, the number one thing that comes to mind in difficult market conditions is get me dollars. That's the number one thing. And then after that, it filters down into what the commodity complex is, how it's doing, and that, of course, goes into the price. I think that's what's going to be the next part of this stage higher is how the commodity complex is going to be moving forward.
All right, so being a dollar bull, gold threatening new highs for the move at 1,700. Do you see a continued dollar strength along with continued gold strength, which most people aren't used to seeing, Sheldon?
I'm just going to bring up a dollar chart. Yeah, I mean, I look at this big picture chart of the dollar. I'm a little bit different than the technical analysts that you have aboard. I like to look at the really big picture, as you can tell. Yeah. And you can see that there's this arc that comes down on the dollar. And we had that false breakout there. I think in the very short term, unless the dollar gets back up here, it's going to be in a process of consolidation before we go moving forward. And you'll see that there's these cycles here that run about almost 20 years. It works in the favor of this actually continuing. And a lot of people talk about the dollar and how strong it was and been, but let's not forget what it's been doing since 2011. I mean, effectively, it has been in an uptrend. So, and it is above the 200-month moving average, which is right there. And it held it there, which was a bullish shine.
What's a moving average that's containing it right here, the blue one?
The blue one or the brown one?
Well, the brown you said was a 200, right?
The blue up here is just an arc that runs from the high back in the 80s through here, and then comes through this high here, and then comes across. So you can see how prices kind of follow that arc, the highs there.
Yeah, that looks bullish on a close over the arc.
Yeah, I agree 100%.
How do you come up with the arc? Go ahead.
Or a huge bull trap.
Yeah. Well, look, that's exactly right. I think that one of the things that I talked about with people last year towards the end of the year, this was going to be the year of the dollar. Either it was going to decide whether it was going to top or it was going to actually break into, basically a generational rally. And, right now it's trying to decide which way it's going to be.
Yeah, so it didn't decide last year, and now we're a quarter into this year. It seems like everything else is making decisions this year. So you would think it would happen here too. What kind of upside do you get for this kind of just measured move off this? Where are those highs? Because I'm not seeing the right hand.
I would say the 2002, 2001 highs are something we would see over the coming years.
What is that level? Because I can't see the right hand of the
Here,
chart.
about 120. About
120. Okay,
Yeah.
thank you, Sheldon.
Yeah.
All right,
120.
yeah, that would be one heck of a move, sub-parity euro. So deflationary forces, is that your take? Especially with what's happened in equities, and I'd really like your take as well on what happened to the bond markets that froze up, and even treasuries, which are the flight to quality, had
Sure.
one of the biggest collapses I've seen in my career from a blow off high at 180 in TLT. So, I'm wondering what your thoughts are there, and then maybe we could go to the S&Ps. Or wherever you want to go, whatever you wanted to talk about. I have a tendency to
No,
try.
it's fine. You know,
Okay.
I one of the things that I looked at about 3 weeks ago was when, sort of the peak of this was unfolding, is I decided to take a look at what the Federal Reserve stress test scenario was in an adverse, they call it an adverse conditions. And I saw some things that make you, I'm sure that the Fed was not using its stress test as a blueprint for its policy,
Corona.
but when you look at, the spread when the triple B bond spreads popped out to 480 or something like that, it fits right in with what they were looking for in terms of the first quarter in their stress test. If you look at the VIX actually got a little bit higher than what they were looking for in the first quarter of 2020. And they used the Dow Jones Total Stock Market Index. The index, like I brought that up here, is they had it coming down about, so their first level was 35.7%, which came to 22,262, and you'll see we undercut that slightly. So
all you had to do was know what the stress test was for banks, and all of those targets ended up manifesting in every one of those markets.
And absolutely correct. Absolutely correct. The one that got a little bit, I guess you would say, more adverse was the VIX got up to 880, where they saw it at about 60, 69, 70. So
close enough for government work. What a great call. Actually, yeah. So I thought I was being extreme, looking for 30 when it was 12 and 14. So that's very interesting that the Fed would have these kind of targets and then they manifest. You read anything into that? How did they know?
Well, I think when you look at what happened, they came out on 23rd with really their shock and awe moment.
Yeah.
And when you look at where the equity markets in particular in the VIX were, but also, triple B yields, basically it was at those levels that preceding week where they were hitting those targets. And what happened over the weekend, they came to their plan. They came up before the markets opened on the 23rd, and they laid out their new policy approach. And I think that whether they admit it or not, I think that they in fact were using this as a blueprint for acting, and they wanted to get ahead of the curve, not be waiting down the line like we saw in 2008. I think it wanted to go big or go home, and yet it effectively worked, at least in the very short term. You'll see the markets bottomed that day and have stabilized since.
Yeah, that megaphone formation that you're showing in the right-hand corner of your screen, it was a very popular formation, Sheldon, until we got the throwover above the top megaphone line.
Yeah.
And then once it got back inside of it, it activated the formation again, and you already showed having a touchdown there.
Yeah, it came pretty close to touch. Yeah, it was. It's interesting because there's mixed views on whether megaphone patterns are actually that bullish or not. And someone that did a lot of work on technical patterns, Bulkowski, says that it's one of the worst patterns actually for projecting gains. So I find it kind of interesting that you see that a lot of markets or indices show this particular pattern.
Well, that's because they're indecision patterns.
Yeah.
They're broadening, so people get bullish at the top and bearish at the bottom. They're great for trading if you're a contrarian, right?
Yeah, no, they definitely are. Definitely. And
so what did Bukowski say? That Do these megaphone formations, once they're in them, just continue to swing wildly within them from the top of the band of the megaphone to the bottom ad infinitum?
Yeah,
Or is
usually
it-
actually you
Go ahead.
have a breakdown towards the bottom. Well, in this particular case, it would be to the bottom.
Okay.
And
All right.
well, looks like we came pretty close to achieving that here.
Yeah.
So, and one of the
That
interesting,
would really be ugly. So we had a throw
Well,
over
it
on
would be.
top. Why can't we have a throw over underneath if we had a throw over on top?
yeah, I think that if we go through the bottom, you know, that could usher in something significant, or also it could create a bear trap and
Yeah.
bounce really high. I think that, you know, it's tough to call really at this point when you look at the formation of the market in terms of how quick it has fallen and then how quick it's rebounded. There's a lot of price compression there now. And, you know, the markets can't just go straight down, straight up, straight down, straight up. At some point, this has got to release that price compression and move sideways. And I think we're actually going to have at least another test of that megaphone line, if not a brief throw under, I guess you would say,
Okay.
on that. So
you're looking at this recovery as being a selling opportunity if you froze like a deer in the headlights and didn't raise cash, and you also see it as for a trader a shorting opportunity.
well, you'll notice here on this particular chart, and it's the same for the S&P also, is that you have this rally coming into the 200-month or 200-week moving average and stalling. And if you go back to 2009, you'll note that in 2011, 2016, and in 18, we tested successfully that particular moving average. We basically melted right through it this time. If we continue to stall there, that would be a pretty good tell that we're going to be moving lower to a test, and that's what I've been watching now.
What's the number on it?
Right now it's at 27321. This is the Dow Jones Total Stock Market Index, so it encompasses the whole market.
Okay. You have an average like that on the SPX?
Yeah, I can. We'll take a look at it.
I'm just curious where that would be coming in. I'm just, picking your brain so I could use it for my own trading, Sheldon.
Okay.
You don't mind, do you?
Well, we'll discuss value after the. No, here we have two on the S&P. We have 2648. We closed a little bit above it yesterday after we broke out. We filled that gap there. So I suspect that we're going to probably dance along there for a while, and it could be where we do it for a while and we release some of that price compression, because you don't see situations where price drops this quickly and then rebounds.
Because I could tell my audience, can you hear me clearly still, Sheldon?
Little bit. No, I'm having trouble now.
Yeah.
No, Dale, you're breaking up.
Yeah. Why don't you take over?
Okay, try again, because I think...
Okay, because I shut down some things I was using, and it was better for a while. Now it's okay. So it comes in and out here. So Sheldon, in light of my technical issues, why don't you just go ahead and show us what else you wanted to show us?
Okay, I'll take over, Coach. Don't worry about it. Sheldon, what about commodities like metals or whatever? Are you following any of those?
Yes, I mean the principal ones. I'm palladium or the agriculture commodities I really don't follow, but gold, silver. I can bring up a gold chart here, a monthly chart.
Do you have any strong viewpoints for any of them? I mean,
I think the gold, particularly gold, sits in a similar situation as the S&P, where we have this very sharp decline and a very sharp rebound. We did see try to move out yesterday. I think this moves sideways to down to release the price compression. I'm actually more bullish on silver than I am gold in the short term.
Yeah, especially given the fact that the gold-silver ratio a few weeks ago hit an unprecedented, historical high.
When I look at it here, the gold-silver ratio, and I look at the deviation from the mean in terms of the 200-week, you'll notice here I've marked points where we got similar just recently, and we've seen rallies or at least consolidation, rally in silver. So I think that at least in the short term, we're going to see continued strength in the silver versus gold.
Yeah, and especially we know that historically, when all the metal complex starts rallying, then usually silver overperforms gold. So if we get a broad metal rally, silver should be signing a little bit more at least.
Yeah, I agree. I think one of the things we have to watch for in silver, and why I say short term, is that it's currently trading below the 200-week simple moving average, which is at about 1664 here. And if you go and look at the monthly chart, you'll see that it is sitting, the 200-month moving average comes in at 1731. So that's where you're looking for resistance to come and play. You can see here silver was trying to find support along the 200-month there before you had that final breakdown there and wash out of the week holder. So those are the levels I'm looking for a test and for resistance to manifest itself.
You mentioned, by the way, palladium. Palladium has been trading for quite some time as a proxy to risk. So in essence, it has been trading in tandem with equity indices, etc. And in my opinion, it has already suffered like a blow off top.
Yeah, no, I don't really follow palladium a lot, but I mean, that for me is a classic blow off top. I mean,
yeah, I'm with you.
Like
I was actually
cornered the market or something.
I was actually short palladium. I made quite a nice trade there, and I do think that as long as we stay below 2,500, we can see a lot more weakness in this market.
Yeah, if you traded a lot, I think there's going to be a lot of intraday swings that you're going to be able to play there, for sure.
What about crude? Do you follow crude?
Yeah, I do follow crude. Well, crude, you know, that was something that really at the end of the month. Oops, I missed it past here. Where are we going here? Is that we closed March with the largest quarterly decline since 1980, and you know, for me, it was really a no-brainer that when you come across here and you see there's a lot of price congestion also along $20. For me, it was a no-brainer that you were to get long a small position at least at the end of the quarter, and that any downside was going to be limited. You'll notice there other large quarters, there was a little bit of downside afterwards and also there. So it was a high probability trade situation. It was one that I took. I didn't take a big position, but it is one that I did take.
Since you like to take the long view on the market, what do you think happens from here in the case of crude?
In the case of crude, I think it's a very similar situation to a lot of these markets where because we had such a huge amount of cross-asset volatility where we had these huge drops or huge rises. It's an issue of moving sideways now, large daily swings and releasing the price compression. I think there's a lot of room for, you know, tactical trading or if not daily trading, but in terms of like looking out intermediate term, I'm not a buyer at this point.
Do you think it can actually produce a lower low from the 19 spike we saw? I mean, do you think we can very briefly trade towards like 17 is a long-term level of interest as well, or, you know, 15 or whatever?
I see this area here. This looks like about 17-ish.
It is. That's a 17. Yes.
Yeah. I think there could be some residual selling pressure left in this, but I think it's pretty limited. I think it's limited. And I think you're going to see some announcements, at least in the next few weeks, that are going to be supportive of oil. I wouldn't, you know, it's not something that I would...
Cutting off supply to support the price.
Exactly. Yeah. Exactly. But you'll notice here, I mean, why I look at long-term charts, you can see here where the 200-month moving average was here and you had it there and it just got above, and then there you have a fail underneath. And then you basically have this head and shoulders pattern and a breakdown there. So it wasn't like this should have been a big surprise for people. I think maybe the speed in which it took place was, but the decline shouldn't have been.
Indeed, indeed. And in any case, if the dollar fails from here, as you said, it's in a pivot area in essence. Obviously, that's going to assist the vast majority of commodities performing better against it. I mean,
yeah, no, it's I mean, one of the ones that I'm really actually might be the most curious about is what copper is going to do next year. You know, it was one of those, it was trying to hang on, and it finally broke there the last couple of days of the panic situation in the markets. But you'll notice here it's sitting, you had also a head and shoulder type of formation. This is a little bit too extended to be, it's a little bit deformed. But anyways, you'll see it was along the 200-week moving average there. And it was also similar on the monthly chart.
That's a Quasimodo head and shoulders.
Quasimodo?
Yeah. You know, the
Quasimodo
hunchback of Notre Dame. Sure.
I like that. I'm going to steal
You can
that.
use. Oh, go ahead, buddy.
Okay, we'll add it. That's new technical terminology there.
Oh, that's a Quasimodo.
Yeah, actually, on the monthly chart, you can really see that there. You'll see also here you had the 200-month moving average in play where it was only gold resistance. So, and then you had a bearish outside month, and then you had that drop down. So, you know, being in Chile and the largest exporter of copper, you know, everybody's sort of got their fingers crossed that the dollar weakens at least for a while. We can get that back up here and a little bit higher.
How's your local domestic currency? What's it called?
Peso.
Okay, and has that been depreciating against the dollar as well for a long time?
Yeah, I'll bring up a chart here, let you take a look. This was, for me, this is one of the interesting patterns you'll see here. You have a gigantic base formation here going back to 2002, right? And you could even call that a cup with handle, and then you had within the handle you had a cup with handle, the whole concept of fractals. The breakout. The thing about Chile is that we had a lot of social political dislocation last year, particularly in the month of November, and you have this huge month where you have the breakout above both resistance levels, and then what's taking place in 2020 is carried it back up to those levels there. The central bank has been intervening to some extent here to try and cap this move. I think we'll see a consolidation, but I think there's probably more upside to go for the pair.
Okay. Well, what a great.
Go ahead.
Go ahead. No, go ahead.
No, I was just going to bring up the U.S. dollar real chart. It's a very similar situation. You'll see the big base, etc., and then a big breakout this year. I think consolidation to come in that, and then I think it moves higher also the pair.
Do you think the U.S. is going to do anything with Venezuela sending out naval task force into that area? I think they've been wanting to. What's your feeling?
Yeah, I think they've been wanting to for years, to be quite frank. I don't think that policy really has changed, and I don't know. It's a tough one to call. I mean, that's a powder keg. I think a lot of people are worried about if Maduro's gone, what is that going to mean for the country? Is it going to just disperse into chaos or not? It's such a divided situation. I think they might do worse than better by getting him out.
Okay. All right. Well,
not that I'm in favor of him, but
speaking of which, Chile is one of the biggest producers of copper in the world. If people
we are the largest. Yeah.
You have Codelco, is it?
That's correct. Right, that's a state-owned.
It's a nationalized. It wasn't always. I think it was nationalized at some point, if I'm not mistaken.
Yes, many decades ago. It's actually very important to the treasuries, you can guess, and it also supports the armed forces here too, in terms.
So obviously, at some point when copper makes a big reversal, that should also be quite supportive for the Chilean peso. In my opinion, it's going to come a time that being long all those exotic currencies is going to be really lucrative. For example, what is the central bank rate in Chile at the moment?
That's a pretty good question. I actually don't know off the top of my mind.
Anyhow, if I remember right, there is a nice carry trade in being long the Chilean peso. So at some point when all these currencies are, posting nice reversals, I think it's going to be a good opportunity being long some of them. including the
Like
Chile.
yes, I agree. I am long the peso against this. But there's one thing about Chile that's a little bit different, is because we had the political and the economic unrest last November, and it was so severe that it prompted a plebiscite on the constitution. And that was actually supposed to come this month, but it was postponed because of the virus till later this year. And I think that's going to be a dark cloud over the currency for a good part of this year still.
Okay. So, well, I'm not going to let years pass before you and I talk together. Some great macro views. Again, Sheldon, your demeanor is like, calm and some real nice looks. I missed the part with silver. Was that a false breakdown and you're constructive on silver?
He's more constructive on silver, he said, than gold and the rest of the metals.
Okay. Yeah. Well, the action's saying that. So I want to thank you for coming here, and may you and your loved ones remain untouched. And really nice to talk to you again, Sheldon.
Yeah, thanks for having me, Dale, and congratulations on the anniversary. And also the same to you and your family. You guys, take care.
Okay, Sheldon.
Thank you. You do.
All right. So that's a wrap. Sheldon, people could follow you at Hurt Capital on Twitter. Anywhere else?
No, you can find. I post my views somewhat regularly there. That's the best place for it.
Okay, buddy. So thank you, my trading warrior brother, Sheldon McIntyre. We'll see everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll be giving away 3 more free subscriptions tomorrow. Adios. See you tomorrow. I'm going to have Chris from Second Skies Forex with us. So see everyone tomorrow. Be well and prosper. Adios. Thanks again, Sheldon.